Now, we may have a risk on, so you see, cryptocurrencies move, what have you, but on a global basis, we are definitely in a gold rush.
The gold price has been doing phenomenal. It's been basically going straight up since September of 2023 up to this point. We know the story, all-time highs, et cetera, at least on a nominal basis. How do you currently view the role of gold as money in the world today? Do you think we're starting to shift because we have seen a divesting of US dollar-based assets such as US treasuries? Some countries are starting to divest themselves of treasuries. We know the story of central banks accumulating gold at a rapid pace. How do you expect that trend to evolve? And are we getting to a point now where gold is actually being recognized as money by market participants and perhaps at some point by society at large? Lynette, your thoughts?
Well, I absolutely agree with everything that you said about gold, but I want to add in that actually it's not traditional because they've only been around for a bit more than 100 years. Gold has always been the safe haven asset. And when the markets now are rejecting what they were using as a safe haven asset, particularly, it's not just the currencies, but particularly the 10-year treasury, which is the foundation of the global financial system yet. And it's going like this, but the demand is gone. Not buying treasuries is a run on the dollar. And actually, China and Japan have been instituting that run since, let's see, what year was that? 2013. So the fact that we haven't witnessed it or it hasn't been obvious because private buyers have been going in to make up that slack, I think that's about to get very, very obvious. So gold, I think, looking at gold as money, but actually even greater than that is the fact that gold is now being looked at as the only safe haven asset. Now, we may have a risk on, so you see, cryptocurrencies move, what have you, but on a global basis, we are definitely in a gold rush. And, honestly, the pricing mechanism, Wall Street's never going to give you good pricing mechanisms because they're about trading. They're not about reality. So yeah, I think the price, even at the all-time high, all that is a bit of relief from the suppression. We have not seen anything yet, not anything.
Rafi, your thoughts?
My thoughts on gold being seen as money. Okay, so I'm going to try to separate. I do agree with Lynette. I just want to say it a different way. The I'm trying to separate what you're talking about. Well, do people recognize it as money, as if there's going to be some kind of renaissance? People say, "Oh, I recognize that this material is now money, and I will use it in my transactions." There's going to be none of that. It's just going. What's going to happen is that since there are two things primarily on the Federal Reserve's balance sheet, and the dollar is the other side of the Federal Reserve's balance sheet. So when you own a dollar, you own basically a piece in equal proportion of in the proportion that the Fed owns their assets, you own their assets too, because you own this dollar bill that is their issued liability unit. So there are two things on it. There's treasuries and there's some gold. And there's also mortgage-backed securities, so it's also tied into a housing bust, But let's just leave that aside for a moment. So when other countries start to drop U.S. treasuries, among other reasons, because for good or for bad, the Biden administration just stole all of Russia's dollar-denominated stuff because they didn't like what it did, and I'm not saying that was the wrong move or the right move, but when you do that to a country, other countries are going to start saying, maybe I should get rid of this stuff. And so when going back to the balance sheet, when you have the 99% of the balance sheet is this treasury stuff, when the value of that goes down, the value of the gold has to go up to balance it, right? And so you can either own the gold or you can own this dollar thing, which is 99% debt and a little bit of gold. I'd rather just own the gold and chuck the treasuries. I've already chucked the treasury. If you own dollars in your bank account, you own treasuries, whether you like it or not. because that's what it is. So in the moment when treasuries are falling and falling and falling, what's going to happen is not people are going to recognize that the gold is money. They're just going to see it's going up and up and up and up, and everything else is going down and down or losing its purchasing power because the consumer prices, I prefer to call it, consumer prices are rising so fast. Then everyone just follows everyone else, not because they have this epiphany, but because that's what everyone's doing. So they just do it.
Yeah, that makes a lot of sense. I do want to shift to silver for a moment here and bring up a couple statistics, because when I talk to people about silver, there's two things that always come up. One is the gold silver ratio, which people point out is historically stretched and it has to revert to the mean. And so by that metric, silver is extraordinarily undervalued. And the other is the previous all-time highs. If we ignore the 1980 Hunt Brothers squeeze because people see, well, say that wasn't a natural phenomenon or whatever. We go to 2011, it got almost to $50. So people look at that and argue, well, adjusted for inflation, it should be triple digit silver. So we're extraordinarily undervalued. Eventually the cycle has to turn and we have to go back to at least $50 silver. I'm wondering what both your thoughts are on those statistics. Do you just see those as, factoids that don't really bear any weight, or do you pay attention to those things when it comes to the silver price? Lynette?
I get asked a lot about the gold silver ratio. And if we were inside of the cycle that we've been in since 1913, then that coming together makes sense. But that's not really where we are. We're in a transition period. And when you look at those transition periods historically, and I'm referring to a hyperinflationary reset, then what you see is, yes, I do expect that to narrow, but as we go into hyperinflation, gold 100% of the time significantly outperforms. And actually, it outperforms right now as well. So both of those assets, both gold and silver, are severely undervalued. But I look at it more from a functional perspective and what it is that I'm trying to accomplish. I don't really care about the gold silver ratio, because that is a trading mechanism. And for me, this is about a strategy to sustain my standard of living, maintain the wealth that I've accumulated, and be in a position to take advantage of this reset and the future undervaluations in income producing assets. That's really where I stand on it. I do like silver. Personally, I own quite a bit of silver, but that for me is about barterability, being able to go to the gas station or I won't need the grocery store because I'm a farmer now. But, if I needed smaller pieces and I have enough silver to sustain my current standard of living for 10 years and that of my children as well. So I own a lot of silver, but I'm going to tell you right now, no way would I be trading out of it just because that gold silver ratio became more narrow, because I don't get, this is what I've kind of figured out just recently, actually, and I don't know why it took me so long, but where people will be nominally confused looking at the numbers, in other words, looking at the numbers and thinking that those numbers actually mean something. Well, they do mean something, but probably not what you're thinking of. And so since I've been studying this stuff on some level my entire life, I kind of think about money and things differently than most people do. So I don't get blinded by that nominal confusion. Woohoo, gold is going up, silver is going up. Now, on a technical basis, and especially you brought up the Hunt brothers, and we have to understand that a lot of that was government manipulation. That was a threat, and that was government manipulation in the markets. However, when you look at that long-term chart, what you're really witnessing are two huge double cup formations or accumulation patterns in silver. So not only do I think it's going to hit that $50 mark, which again doesn't really matter to me. It's more from a technical perspective, but I believe that it will go far, far beyond that. Just like the true fundamental value of an ounce of gold is over 40 grand an ounce. Is that reflected on Wall Street's contracts? No, because they're just paper contracts. although there are interesting things happening there. It's the same thing with silver. I mean, the fundamental value of an ounce of silver is $2,000. So it's trading at $33. What does that mean? That means if you can understand how to buy an undervalued asset that's in a long-term positive trend, rock and roll hoochie coo, get as much of it as you can, but it's not because it's going up in terms of dollars, right? It's because it will protect you and it will put you in a position to take advantage of the inevitable. Does that make sense?
Yeah, I think that's a great way of putting it. And that kind of separates, you know, there's some people who don't really see gold and silver as wealth or as a way to protect their purchasing power. They see it as a trade. So when I talk to people sometimes about it, they say, "Oh, why do you buy gold or silver? You think it's going up?" And I go, "I don't really care about the price that much." And it stuns a lot of people. They're just like, what are you talking about? So, but you explained it perfectly there. Rafi, your thoughts on just the overall state of the silver market at present and those statistics, the gold silver ratio, the previous all-time high. Do you pay attention to those facts at all?
Yeah, I look at it. I'm not too concerned about it. It's not like I'm waking up in the morning, I'm like, oh, gold, silver went to 100 to 1. I must be wrong. Silver's not money. I mean, if it was money, it wouldn't have gone to 100 to. I don't have those thoughts because they're ridiculous thoughts. It has gone to 100 to 1 before. It was in times of extreme financial stress. I think the first time was when Roosevelt revalued gold from 22 to 35. So then all of a sudden, in dollar terms, gold was extremely valuable, and it took silver a long time to catch up to that. And it happened again during the lockdowns. Um, every time, every time, it just gives me like this like flash of nausea.
I'm with
Um,
you.
yeah. So those are times of insanity. Um, different degrees of it. I did a video on this, and I'll just briefly say what I discovered on that. That Gold Charts R Us has this long-term chart going back to I think 1100 on the gold to silver ratio. That's not that it's super accurate or anything, but it's a good estimation. And we do know from the Bible, from the Book of Kings 1, I think chapter 7, I think that during Solomon's time, the value of silver was nothing because so much gold was being imported to the kingdom that like silver was like pennies. They would drop it on the floor, nobody would pick it up. So we know that when society is very, very rich, the gold to silver ratio goes really, really high, meaning silver is relatively worthless. And when society's really, really poor, we know that silver goes much higher relative to gold because everyone's poor and they don't have gold. So in an inflationary world where all the money is fake, so what would a high gold to silver ratio mean? It would mean that people are acting as if they're rich, right? They think that they're rich because they have all these dollars in their account, and so they chase stocks and they chase Bitcoin and they chase all these other things, and that suppresses the price of silver. Gold, I'm not exactly sure why it's going up specifically now. I know why it's going up generally, obviously. But people have these theories that it's central banks. So if central banks are pushing up the price of gold and also everybody else thinks they're relatively rich, then the gold silver ratio will fly higher. But we've seen it go back down to 15 to 1, which is the historical ratio from around 1100 to now by that chart. And it's going to go back there again. It did it in 1919.